breathe hard. Chair Finance, Honorable Wanga.
Thank you very much, Honorable Speaker. Honorable Speaker, I beg to move that the Finance Bill, National Assembly Bill number 18 of 2021, be now read a second time. Honorable Speaker, as I begin, let me thank the Committee on Finance and National Planning for their dedication and the work that they have put in to ensure that the committee has a report shared with the House in good time. Honorable Speaker, for the record, the Finance Bill was published on 5th May 2021 and read a first time on Tuesday, 11th May 2021, and thereafter committed to our committee. The bill sets out revenue-raising measures for the national government and amends specific tax laws and other statutes for effective collection of revenue as relates to the budget of the fiscal year 2021-2022. Honorable Speaker, this finance bill, which is essentially an omnibus, seeks to amend the Income Tax Act, Cap 470, the Value Added Tax Act, number 23 of 2013, the Excise Duty Act 2015, the Tax Procedures Act 2015, the Miscellaneous Fees and Levies Act 2016, the Capital Markets Act, the Insurance Act, the KRA Act, the Retirement Benefits Act, and the Central Depositories Act. Honorable Speaker, this finance bill is done at a very delicate time when Treasury and members of this House have to balance between cushioning Kenyans from the COVID-19 pandemic, but at the same time raising sufficient revenue to fund or to finance the 3.6 trillion budget or the supply that we have just done, which the Budget Committee has just concluded through the appropriation bill. Honorable Speaker, again for the record, because a lot of people for their patriotism, and one such stakeholder is Ernst & Martin, who's a young Kenyan who at every point comes to participate and brings views to protect, wananchi, but also to protect government from leakage of revenue, and we really want to thank him. That, among several stakeholders, Association of Manufacturers, KEPSA, and others who are always there to make presentations. We listened, Honorable Speaker, to a total of 34 stakeholders orally. And Honorable Speaker, there were many, many views that were proposed. Honorable Speaker, if you look at the finance bill, clause 2 of the finance bill seeks to reintroduce definition of is considered to have control. If a person has advanced a loan of at least 70%, that person is considered. Then there is also the other issue that committee also discussed at length, which is the F part of that clause, saying that if a person supplies at least 90% of the purchases of another company, then that's, if company X supplies at least 90% to company Y, then company X is considered to have control of company Y. But the question that we raised is that really a practical form of control? An example is people who supply specialized equipment or services. For example, Boeing and Kenya Airways. Boeing supplies 100% of the planes owned by Kenya Airways. Can Boeing be considered, just by virtue of that supply relationship, to have control of Kenya Airways? So the committee will be proposing declaring small profits, then that means a reduction in the taxes. So, Honorable Speaker, we listened to several views on this matter of control. Some even said we should delete this entire definition of control, but the committee did not agree. The committee will be making amendments to just streamline the issue of supply and purchase as factors of control, but will not be agreeing. Interest earned on them are exempt from income tax, and they can be used to finance projects as listed. Honorable Speaker, the reason we are defining the infrastructure bond in the Income Tax Act is to clarify the type of bonds that can qualify for exemption from income tax or interest earned on enables users to sell or provide services or goods to other properties or other users. Honorable Speaker, a lot of transactions are currently going on digitally. And one of the amendments that have been made or that are being proposed is not just to talk about selling online, but also to introduce the term electronically. Why? Is because a company such as Netflix is not selling. There was a lot of fear among our local young emerging business people saying that now digital service tax is being levied on us, but this bill has clearly outlined the fact that the digital service tax will only be paid by non-residents. So if you're Amazon, if you're Netflix, if you're others operating outside, you will pay the digital service tax. Because those who are operating locally are already in the view of KRA, and they will already be charged the local taxes as they accrue. Honorable Speaker, the bill also seeks to repeal the current provision on thin capitalization rules based to Company Y, and Company Y lends Company X money and charges very high interest rates of, say, 30 or 40%. Any interests paid currently are deductible when you're when you're doing your taxation or you're calculating your profits. But right now, the provision that is being made is such that the interest deductible will only be allowable up to 30% if you're dealing with related parties. So only up to 30% of interest will be allowed to be deducted from the amount for your profits. Honorable Speaker, the only exemption that the committee is proposing to make is for institutions where interest is their business, such as banks, any institutions registered under the Banking Act, and micro, small, and medium enterprises, so that MSMEs are not adversely affected by this rule. Honorable Speaker, the bill introduces a country-by-country reporting requirement on Kenyan headquarters multinationals, referred to in the bill as the ultimate parent entity. Kenyan headquarters multinationals are organizations such as KCB, Equity. Speaker, under the VAT Act, the bill seeks to change the VAT status of exportation of taxable services. But this means consultancies, this means our transporters. The people who presented strongly to us were transporters of goods who transport goods from Kenya to Uganda, for example, or Tanzania or the region, or DRC. If you remove them from the zero rate, then they become non-competitive in the region. Somebody will just go and establish in Tanzania, their trucks will come from Tanzania and transport goods here and go back. So the committee has made a consideration for this, and while the other services have been retained, the transportation services have specifically been retained or are proposed to be retained as zero-rated. And I'm glad that Treasury also do not have a problem with this, because immediately we are going to have a shift, because this is transport, this is moving, this is mobile. I can easily be headquartered in Uganda and still bring goods here. So if we do this to our transporters, our transportation sector, especially at the coast, moving goods across, will have a problem. So the committee has strongly considered that reduction, that amendment to keep this as zero-rated transport other than by air or sea. In order to address our tax expenditures, the committee has agreed with the proposal with Treasury on the proposals to change status by removing from the items from exemption a series of items there. You will see them on the bill. Most of them we have agreed, but we have also agreed with a long series of items that have been added to the exemption list, and these are mostly medical. These are mostly medical items. Honorable Speaker, the long-COVID vaccine without syringes, because it's not an oral vaccine. So the committee proposes to return syringes to the list of exempt items because it is important to keep them there, especially during this COVID period. The other item that the committee has proposed to retain is infant baby formula, a matter that Honorable Shakil is very passionate about because he has 4 young infants, and he says he spends a huge sum of money on just the formula every week. Because ordinary bread, Honorable Speaker, is a staple for most families in Kenya today. Honorable Speaker, ordinary bread should just be allowed to remain. The committee proposes that it's allowed to remain 0 rated, because even if you say that you are moving it to exempt, and you say the government is going to raise revenue, the revenue you're raising is just going to be put on the wananchi. So therefore, we are just going to raise the cost of bread, Honorable Speaker. So the gap or hole in the revenue raising plan, Honorable Speaker. Honorable Speaker, bread is one of them, fly is another of them, Honorable Speaker. Deleted so that Parliament retains its power in dealing with the issue of regulations for VAT, and Parliament, so that Parliament, on behalf of all the people we represent, can have oversight over this very critical matter. Honorable Speaker, on the issue of excise duty, the bill was proposing to amend rate of excise duty on motorcycles from 11,608 to 15% of the excisable value. Honorable Speaker, while the Treasury made a spirited explanation on this matter, it might be a bit too complicated for it to be understood now. And we fear that vendors might take advantage just of that change to overcharge motorcycle vendors. So we felt that since it is not even raising that much more revenue, we should remove it and have a better explanation so that as we move forward with the previous position. Honorable Speaker, the committee is unanimous that we need to support the border industry, which has contributed significantly in youth employment. So that particular proposal on motorcycles, the committee, even though, you know, it might not be adverse, but it needs to be explained better so that when it is introduced when it is understood by everybody. Honorable Speaker, the bill seeks to reintroduce excise duty on locally manufactured confectionery. Locally manufactured confectionery. This is a sector that is a very, very big employer for many, many Kenyans, Honorable Speaker. The committee feels that we need to protect the local manufacturers, but maybe increase excise on imported sugar and confectionery items so that we protect the local manufacturers, but we excise higher from 20 shillings per kilo to 35 shillings per kilo for imported confectionery. That way, we can protect our local jobs and our local industries, while at the same time, still raising revenue in this sector. I hope that the House will agree with us on that particular matter. Honorable Speaker, we must deal with the issue of betting, Honorable Speaker, and the proposal was made for 20%. The committee even proposes to lift this further to 30% and distribute it, Honorable Speaker, among all the areas of betting. Betting, if you look at the Betting and Lotteries Act, has 4 segments. It has betting, it has gaming, it has prize competition. This prize competition is the one where people call and say, send this much, you will get this much, which is a growing form of gambling, Honorable Speaker. And then there is the lotteries, especially the non-charitable lotteries. So the committee proposes to increase this even to 30%, but distribute it among all the 4 sectors of betting, so that it is carried by everybody, not just by one person. Honorable Speaker, the committee will be making those proposals. Honorable Speaker, as I go towards the end, there is the matter of how long documents should be retained by taxpayers. And the bill was seeking to move it from 5 years to 7 years. But Honorable Speaker, in this era of digitization, really, there would be no need for KRA to require taxpayers to keep documents, to bear the burden of keeping documents for 7 years, Honorable Speaker. So the committee did not agree with that proposal and proposes to just retain it at 5 years. But also another interesting reason that came up, Honorable Speaker, is, you know, regimes change in this country every 5 years. Therefore, if in the 6th year, the former regime, the new regime wants to catch up with people from the former regime, they will just say, bring your documents because you're supposed to keep them for 7 years. And therefore, they catch up with you and they can really take you round in circles. Honorable Speaker, there is an important matter on the tax procedures, where the Tax Procedures Act, where this bill seeks to let me just find it. It's clause 33. It says that where the commissioner notifies a taxpayer that an application for refund has been ascertained in accordance with subsection 3 and applies the refund to the payment of an outstanding tax, or interest or penalties, or B, interest or penalties shall not accrue on the amount applied to the payment of the outstanding tax from the date of notification. Now the trick is, if KRA notifies you that they owe you, from that day of notification, there is no interest accruing on your part. What the committee is proposing to do with this particular clause, which is it's a good clause, but the committee is stating the committee on its consideration of the finance bill, and the committee is grateful to the officers of the Speaker, of the Clerk of the National Assembly for the logistical and technical support. The committee further wishes to thank all stakeholders who submitted their...
For giving me an opportunity to second this bill, the Finance Bill 2021. At the onset, Mr. Speaker, allow me to thank and congratulate my